This is largely why de-dollarization is a myth. If it could happen, it would have already happened.
It is happening. So, we've always been in this position before as a global reserve currency. It has never ended well. They all die.
If governments wanted to go to gold, they already could. They already would have. So now that they have chosen not to go to gold, officially, the only thing that matters is the capital stack of fiat.
You're saying that they have chosen not to go to gold. I think this will spiral in the way that I just discussed until they're forced to go to gold. And that's what we're in for.
We're ultimately going to see outright gold remonetization because that will be the only thing left on the balance sheet that is not defaulted.
You do know that you're describing the milkshake. I just want you to acknowledge that.
But with gold at the center.
Not the dollar. Not the dollar.
The golden milkshake.
Yeah.
No. This is the fundamental misunderstanding of the milkshake.
We talk about accumulation of gold being a signal that people are losing trust in the dollar. So why is it that when China accumulates gold, it's not a signal that it's a loss of trust in the yuan?
Let me just express to you why this is starting to frustrate me. I've already acknowledged gold could go to $50,000 in this scenario. Can we now talk about something other than gold?
I just did. You just don't like my answer.
If you think that we are going to have a war in order to come to this new system and the dollar is going to fall versus foreign currencies, I'm just going to disagree with you 100%.
Welcome to the Future of Gold in Cape Town, where we invited some of the most renowned thinkers in the financial markets to discuss macroeconomics, geopolitics, and all kinds of things related to precious metals. But before we start, I would like you to know that you have 20% discount on any transaction fees if you buy gold, silver, or platina at goldrepublic.com. See more in the description below. All right, welcome to the second session of the Future of Gold here in Cape Town in South Africa, joined by my beloved guest. On my left, I have Whitney Baker from Tokenized, John Butler, Izabella Kaminska, and Brent Johnson. This is the second session. This session is about the future of gold. In this session, we will try to unravel the role of gold in this constantly changing monetary order that we see happening today. But first of all, I would like to give a bit of context. 2025 has been quite a crazy year for gold, right? I mean, we've had 53 all-time highs. We're flirting back to the last all-time high now with the current crisis that we see in the Middle East, approaching $5,400 an ounce. We've also had, in terms of central bank purchasing gold, 3 times in a row, about 1,000 tons of gold purchased by central banks in a row. Last year alone, 5,000 tons of gold have been purchased. That's a world record in terms of purchase of gold globally. So gold is kind of reaffirming its old role as a monetary anchor. And this is also what we're trying to do here, is to see and look at the past and see if the future of gold will be also the same as the past of gold. So my first question to you is, where do you see gold as its role in the monetary system today, now? And I would like to start with you, Whitney.
So right now, obviously, as we talked about in our prior session, gold used to form the basis of the monetary system, and it was important that it did because it constrained the amount of credit that could be extended and therefore the amount of debt that we could accumulate. And more importantly, not just from a monetary tether perspective, but from a debt affordability perspective, the debt that we took on at that time had to be basically productive in that it had to generate future income to repay it. And when you're taking on debt in order to fund consumption and you're consuming imports from abroad, which is the model we've operated under, what that naturally does is means the debtor consumer country ends up with a load of debt and the supplier surplus country ends up with a load of claims on that debtor, but also all the manufacturing capacity, all of the real income growth. But fundamentally, that system has a architecture that is unsound unless it continues to grow in an exponential way, which is why we have these constant crises. So the whole point of gold as an anchor is to basically, create productive and self-funding growth through time that's non-inflationary and without, arbitrary political and social redistribution effects. So getting rid of that has been the reason why we have these giant imbalances. Now, like the part of the thing we were sort of debating last night was, well, how do you actually get out of that? Like, this is where we are now, right? And you can't abruptly change that system because of the level of the imbalances. Like global debt relative to income's never been anything remotely close. And all of this wealth, paper wealth on the other side is just sitting there supporting a lot of economic function. So how do you wean yourself off this? And it's so large and unstable, can it even be done? And I think it can. You just have to actually have policymakers and policies that, at least there's a good chance it can. It's just going to involve a lot of real wealth destruction, and that's going to undermine stability, and that's where gold comes in as basically the foundation of, as it always is, the initial first stage of any monetary cycle always has fixed currency, and it's always been gold. It doesn't have to be, but it's always been gold, sometimes silver. Back in the day, debasing the currency was adding silver, right? So I think it will play that role again, and I think that things like stablecoins can be the transaction layer, that gold is essentially backing, that makes it easier to transact in gold. That's a possibility. But I think it's going back to gold, but not after a lot of disruption. Not before a lot of disruption.
John?
Well, I mean, gold today does not officially function as money. And yet, behind the scenes, it is reasserting itself. It is being, in certain respects, remonetized. You mentioned the huge purchases by central banks in recent years. Central banks may still say that, our not gold-backed monetary system still works okay. We just need to make sure that regulation keeps up with it and not too much leverage gets into the system. But actions speak louder than words. And these very large purchases of gold by central banks are an acknowledgement that, in reality, trust and confidence in the current system are declining very, very substantially. They're probably declining for a variety of reasons. Whitney just mentioned a few of them that I think are extremely important. There are geopolitical concerns. There are all kinds of concerns today. But gold is doing what it always does historically when attempts are made to move away from it that result in credit excess that may be used to finance wars that are destructive of the capital stock, making countries less productive. Gold is the natural historical hedge against all of the above. And so when you look at the world today and you're concerned about economic imbalances, you're concerned about shifting balances of power and geopolitical possible big conflicts such as we're seeing possibly emerging now in the Middle East, gold is the ultimate hedge. So whether gold is officially remonetized or not, the price is likely to keep moving higher. But beyond a certain point, I do believe we will eventually see some form of official remonetization. How exactly we get there and how disruptive it is very unclear. But in some way, shape, or form, I strongly believe that's going to happen.
So I certainly see a role for gold in the new emerging financial system, and I think my hunch is that it's going to play a very important sort of liquidity role for countries that do not feel comfortable being using US dollar stablecoins or being in the US dollar system per se, or even in the any Western sort of currency system, whether it's the euro. I mean, it's not going to be sterling, but you know what I mean. So you certainly obviously see this huge accumulation of gold in places like China. That said, I think it's important to remember that if that is the case, that changes the paradigm for how an economy like China works as well. So I just would caution that it's I think a little bit too simple to just say, well, China's going to outperform everybody because it's accumulating all this gold. We have to recognize that if it is true that pushes China into a hard budget constraint, that changes its economic model completely in a way that doesn't necessarily allow for its continued export dominant, model. So yes, I think if you don't want to use the dollar, gold is going to be there as the backup, but it fundamentally transforms the way the geopolitical order is currently structured as a result, because you just won't be able to get away with that kind of mercantilistic approach.
Yeah, I think I'd build on what John said. Regardless of whether gold becomes officially money or remains unofficially, in some people's mind, money, it doesn't mean that the price won't go up, and it doesn't mean that it's not important. I personally don't believe it's going to be remonetized anytime soon. It's not to say that it can't happen. I think you need to acknowledge why it could happen and be prepared for it to happen. I just don't. Because I think it's the last thing any government wants. If a government wanted a gold-backed currency, they would already have it. They have the power to do it, and they've chosen not to, despite many opportunities and reasons along the way to do it. And so I don't think they may do it as kind of a last-ditch effort. Perhaps they do it as some kind of a Nash equilibrium, move. Can't rule it out. I think it's very low probability that happens. And so I think of gold, I know this is going to sound ironic because I'm a huge believer in gold, and I think gold could be money, and I think if we had a free market, gold would be money, but I consider gold anti-money. In other words, it is the money that is unofficial money. But that's not the world that I live in. I live in the world as it is, and as a market participant, I have to analyze the world as it is. And I think that there will be many steps taken to reinforce or reintroduce or develop, however you want to mention what's going on with the monetary system now. I think there will be many steps that are at least attempted before gold is remonetized. Now that does not to say that gold won't raise its hand and say, I'm right here, hello. And I think that's what we're seeing now. Gold is putting itself forward as a worthy successor or a worthy option. But I have a hard time seeing the governments around the world saying, okay, let's go with that one.
Well, I think that what's interesting about gold right now is that it is doing that, but it's not like it's gold doing that. It's China doing that largely. It's central banks basically opting out of the dollar system by buying gold, which is the traditional flight that prompts that kind of a move. But I completely agree with what you're saying in the sense that they will only do anything with gold as an absolute last resort. Like we have shown that every time you'll do bailouts, you'll do self-bankrupting. And this is part of the foundational reason why, in an ideal world, gold would just remain, or something less arbitrary than gold would remain the standard, and it would constrain imbalances, and we wouldn't be in this position. But every empire gets to this point where they essentially overextend and decline and become decadent and want to buy off the population and the electorate and so on, and it's self-bankrupting. But it's followed this cycle, tens of different cases you can go through in very linear, anticipatable succession. And the final stage of that is they hit an ultimate constraint, and one of the main ultimate constraints is a run from your currency that prompts this. So I don't think that I think that probably this alternative of basically China accumulating gold at the margin, not reinvesting in dollars, but both because the jurisdictional risk, but also because of the overvaluation of the dollar. And so they move into gold. They have a lot of the stock of gold. And then ultimately that they say, look, why don't we just become the new global hegemon? And we've got a sound currency right here. That's more like the competitive way that it approaches or sort of remonetizes, because then money leaves the U.S. system at a much quicker rate. So they could do that as an actual, I wouldn't call it an active financial war, but it's something like that. But you're right that it constrains excesses in both surplus and debtor markets, and they would both have to deal with a huge debt work through.
Can I just ask, and I know it's Alexei who's supposed to be asking, but it's the inner journalist in me. So where I have trouble with that, I agree. I 99% agree. But where my 1% quibble is, we talk about accumulation of gold being a signal that people are losing trust in the dollar. So why is it that when China accumulates gold, it's not a signal that it's a loss of trust in the yuan?
That's my point exactly.
Because
it's official sector doing it.
And I would say it's China. China's the one running the surplus. The U.S. is the one running the deficit. So China's not dependent on foreign capital. The U.S. is. And so I think the perception globally.
I don't think that's true that China's not dependent on foreign capital at all. I think
it's very marginal for China, though.
That's not marginal. I think it's very key. Have they?
Yeah, they're working on
trade.
Oh, their global goods trade.
I don't think that's true. There's still like the dominant settlement currency in China is still at the kind of merchant level. It is still for international supply chain stuff. It's still the dollar.
No,
and
you're
why are
looking
they
at Swift
raising
data.
dollar? Why are they raising dollar bonds in Riyadh and Paris if they don't need dollars?
Because you borrow in a currency you expect to fall.
That's right.
No, you.
That's not.
Yeah, and the settlement
That's
transaction
crazy.
data is not. You can't look at the SWIFT data because it obviously excludes their main trade
So
partners.
emerging markets that are forced to borrow in dollar do so because they are strong.
Emerging markets haven't been forced to borrow in dollars for 25 years. They're net dollar creditor nations by and large, except for Turkey and Argentina.
And Indonesia, I believe, is still running a
Indonesia's
deficit.
net long. It's running a current account deficit, but it's net long dollars.
Got it. Okay.
Yeah.
But
Well,
sorry, go on.
net long dollars if you're considering that they could sell all their U.S. dollar assets.
Correct.
But when you sell U.S. dollar assets, the prices fall, whereas the debts do not. So this idea that they
Yeah,
could
but the debts
liquidate-
live in the U.S.,
No,
not
but,
in
But
Indonesia.
the idea that they could sell all their U.S. dollar assets and pay off all their U.S. dollar debts is completely erroneous. That could never happen.
Why? I mean, Indonesia's not
because
big
when you
enough
start selling
to,
U.S. dollar assets, they will go down 50%.
Not from Indonesian selling. It's very small, right?
If an individual country or an individual company
Right.
decided to de-dollarize, that very
That's
small
how a bank
country
run works.
or that very small country or that very small corporation could do it.
Yes.
On a systematic basis, it cannot happen.
But the incentives are for each individual to do it, which is the exact incentive
Right,
of
but
a bank run.
but as soon as every individual starts doing it together,
Yeah, you
in the
get a-
same
you
way
get a
that
crash.
the
Yes.
same way that the
Yes.
Nash
Yes, it
equilibrium
becomes nonlinear.
becomes
Yes.
positive,
It spirals.
can also become negative.
Totally.
And if everybody does it, it hurts them
Yeah.
more than it hurts
But this
the
is the
US.
prisoner's dilemma we're in as we live in this world.
But this is largely why de-dollarization is a myth. If it could happen,
It
it
is
would have already
happening.
happened.
It is happening.
So, okay, to be clear, foreign holdings of U.S. Treasuries on a unit basis has never been higher.
Relative to gold,
No,
it's
no.
the lowest it's been for decades.
John, we all agree that gold has gone up a lot. That's irrelevant.
But that's relevant. That is relevant to this discussion.
Then why haven't we talked about gold has risen versus European Treasury holdings and Yuan
It
Treasury
has.
holdings?
It's risen versus everything.
That's right.
Because all these fiat expressions of credit and imbalances that cannot be serviced without a general global massive fiat currency devaluation, right? Gold is the only alternative to that.
But we all agree with that.
Good.
Right. So look at who's
But
actually
that-
buying
but-
treasuries, though, to connect it to their motivations, right? Foreign official sector ownership of treasuries and agencies peaked in 2008 and then went up a little bit after QE and then peaked again in 2015 when Russia and China depegged.
And the same thing
And it's
happened to
been
European
stagnant.
sovereigns, Asian
Totally.
sovereigns,
This is not
Agreed.
right.
South American
Right.
Agreed.
Exactly.
So who sits at the top of the capital stack of
Totally.
fiat currencies?
Right. So we can talk about who's going to go down faster. Like that's a thing we can talk
That's-
about. But
but
the
hold on.
idea that no one's going down because
but
that's
hold on.
because it's impossible. That
Okay.
idea doesn't make sense.
To be clear,
it's happening.
everybody knows the fiat goes down. Everybody knows that.
Yeah.
There's no debate.
Right.
So let's talk about which of the fiats are going to remain dominant. Because if governments wanted to go to gold, they already could. They already
Right.
would have. So now that they have chosen not to go to gold, officially, the only thing that matters is the capital stack of fiat.
Well, no, you're saying that they have chosen not to go to gold. I think this will spiral in the
I
way that
agree.
I just
It
discussed
will be nonlinear,
until
in
they're
my opinion.
forced to go to gold, and that's what
Right.
we're in for.
Okay.
It will start with small
So you could
countries
say
around
it's
the
not
No, no.
possible.
No,
You
no.
could say it's not possible because it would create
No,
a crash, but
I-
that's
all
exactly
actors
why.
around the margin.
You guys are not listening.
Yeah.
You guys are not listening. It can happen. And
Yeah.
gold could go to $50,000. I agree. I think Izzy agrees. I think Michael agrees. But if that doesn't happen, it can. But if it doesn't, until it happens, the fiat hierarchy matters more than anything in the world. It is the single most important variable until the day
Right.
gold goes to $50,000.
But that's where we disagree on which currency does worse, because in that environment, now we can talk about growth and interest rates and different mechanisms that equilibrate these imbalances. But if we're doing it in a fiat world without, we'll have capital controls at some point, but without capital controls in the near term, the currencies that do worse under this scenario are debtor currencies that are not just reliant on people
Unless you're the
maintaining
global
their
reserve currency.
Well, yeah, but we've always been in this position before as a global reserve currency. It has never ended well. They all
Is it
die.
not
When-
the case that
when-
the US
when-
still has like
There's
on-
nothing
in terms
unique
of
about the
official
US.
reserves?
There absolutely is.
There is not.
What do you want to say?
Is it not? I mean, I'm not sure. I'm asking you guys as gold experts. Like, is it not the case that the U.S. still, in terms of official reserves, if you believe the numbers, has the most gold?
Yes, but the problem is, even those official reserves at current market value would only cover about 9 months of the U.S. current account deficit. So in other words, the U.S. has very little gold cover. And when you analyze the creditworthiness of a country, the coverage ratio of their reserves is essential to
But
assessing.
the U.S. has more than China does on that same
Exactly.
basis.
And it's not like
No,
China.
No, it
does-
absolutely does.
No, China's an exporter. They're a net exporter.
if
They don't need import cover because
Yeah.
they're a
Are you
net
talking
exporter.
GDP
No, they
or
do
what are you
need
talking?
import
No,
cover.
from a
That is
currency
a myth.
perspective,
That is a
net
myth
export.
because
Yeah.
China
I'm
has.
talking about their monetary base.
Yeah.
Compared to their monetary
I'm talking
base.
about net export.
Yeah, but what you guys are talking about are just two sides of the same coin. You
Yeah.
have your
No,
current
yes.
account and your
No,
capital
no,
account.
no,
If
we're
you're a
not.
surplus
I don't think
country,
that's the case.
Let
let me
and
just
you can
finish my
answer,
point, which
Izabella.
is that a currency price
Yeah.
is determined by the marginal
Yeah.
supply and demand for that currency.
Yeah.
Okay, in a situation where fiat is even constrained in any way, there's a constraint to the amount of net borrowing that can happen. The debtor countries, this is the emerging market problem, right? The debtor countries that run 3, 4, 5% current account deficits, they need that amount of money to come in willingly just to hold the currency where it was. Okay, they have a run to stand still problem that the surplus countries don't. And in an environment when people's domestic incomes are contracting and they have falling asset values or debt work through that they have to do, like the Chinese case, they're going to sell those foreign assets that they own, bring it back into and support their domestic currency and use the proceeds to try to smooth out the adjustment. It's just how this is going to play out. It's how it's always played out. It's why there's constraints ultimately at the end of the day.
So
It's
first of
how
all,
these
I
things end.
disagree that China is in this infallible position.
No one's claiming that.
It may be like
Yeah, no
a
one
net
is claiming that.
exporter in terms of finished goods and manufactured goods. It is still hugely dependent on commodities and obviously rare earths is one of the issues. But when it comes to silver, for example, which it needs as an industrial metal to create solar panels and EVs, which is one of its key areas that it wants to like outcompete the world on. Turns out, it's the West that controls most of the global silver supply, not China. And a lot of the current, run up in silver, I think, is also a realization that we've seen this with the Xi has been very upfront actually recently, saying that China has to buckle down on these perpetually loss-making state-sponsored enterprises. And as it does so, hard budget constraints are coming back into the corporate sector in China. And as they do, things like runaway silver prices are posing a problem. So we're now seeing a lot of solar companies under stress in China. We're seeing a lot of EV companies. The reason there's only one big player is because all the others were so loss-making, it has to consolidate everything. Whether they can continue to produce at the rate that they've been doing when some of these raw inputs are now well above, I would say, the unit costs that allow for that, in a increasingly hard budget environment, I don't know. And secondly, I think China has a lot more debt internally than anybody appreciates.
They do.
Yeah,
Seven
but they
trillion.
owe it- but they owe it
There's
to
no
themselves.
question.
It doesn't.
Hold on.
I don't.
Hold on. Let's address
Yeah.
that. Hold on. They owe it to themselves. But that's a huge problem. Because
I'm not saying it's not a huge problem.
But the only
It
way
just doesn't impact
Right,
currency.
but the only
It's just not a
currencies are not-
currency.
No, but no.
I don't think that's true.
Hold on.
My last point, just on that front, and I'm sure you will address and add to it, is that a lot of the accumulation, so China, there are no real private sector companies in China, so much of the dollar positioning has shifted to the banks. And the banks, so it doesn't show up on the official accounts, but the banks do what the government tells them to do, right? So when the banks are continuing to load up on dollar assets, they're basically the ones buying the dollars and also extending dollars. So there is an element of dollar leverage in the Chinese banking sector that I think people don't appreciate.
It is so tiny.
It
It's
doesn't matter. You
7%
said
of
yourself
bank
the
assets.
marginal factor is the key.
No, but if
Regardless
it
of-
doesn't, if a transaction doesn't cross borders and change hands between currencies, it does not impact the price of a
Who
currency.
has been financing all of, so we've now seen rerouting of a lot of the manufacturing via places like Vietnam. So who has funded Vietnam to allow for that? Who are the main banks that have allowed the Vietnamese
I
to...
believe
It's been-
China
it-
has been a huge
It's
investor
been
in
doing
Vietnam.
it through
I looked at
income.
the
It's
number.
taking
What's the
income
answer, Izzy?
share.
It's Japanese banks. Japanese banks are the number one funders of the
Yes, you're right.
rerouting
Japan
of
has a massive
Vietnam.
dollar problem. I will grant you
and
that.
and so it's actually their dollar float that is financing the rerouting.
Yeah, Japan is just the last point.
Sorry,
just
that's
on
what I
that,
said.
Japan has taken over the role in this cycle that the European banks played in the GFC cycle, being like basically borrowers and lenders of dollars with mismatched durations and all sorts, and that's about $4.5 trillion now. So they're the marginal lenders, and they will have all sorts of bad exposures in there. So I agree with you, but that's not China's problem.
Brent?
I just want to address the problem of China owing it to themselves. For them to resolve that problem, which I think we all admit is a problem, it means a massive devaluation of the purchasing power of the currency. That is the way you handle too much debt, is you write down the currency to bail out the bad lenders. And so everybody will always talk about this huge debt problem the United States will have, and is going to have to devalue the dollar as a result. But China faces the same thing. The fact that they owe that to themselves does not save them from this problem.
You only have to
It doesn't save them.
devalue.
It doesn't save them, but the currency is not the adjustment mechanism.
Yes, the
in their
internal
case.
price
And
level.
The same's
The
true in
internal
Japan.
On an
price
external
level
basis, it
is
is.
the
The purchasing
devaluation.
Same is
power.
true in Japan.
The purchasing
Yeah.
power, it absolutely is the balancing mechanism.
Yeah,
The
it's
purchasing
internal
power of the
deflation. It's
yuan-
internal deflation. That's all. When you don't
No,
owe
it's
it across
inflation.
borders,
It's internal inflation.
That's why
no,
they're
they're
buying
not going
gold.
to get that.
To pay off the debts internally, $70 trillion of corporate debt, they will have to devalue the currency massively to plug the holes that exist on the internal banks.
But if there's no dollars involved in the debt
I'm not talking about the
problem,
dollar. I'm talking about the purchasing power of the yuan.
I understand that, but it doesn't actually matter vis-a-vis the rest of the world. If
It
they're
matters
trying
to
deal
a,
with
if you're a
domestic
citizen
debt
in
problem.
China, it matters to the purchasing power of your currency, and that's why you buy gold. Not because Jay Powell has lost his mind and Donald Trump is a moron. They buy it because they know the yuan is not going to
They're
hold its
hedging
purchasing
against the
power.
At this
yuan.
point, actually,
I
Brent, I
disagree
would like
with
to
that.
bring up another point maybe that hasn't been mentioned. There was like the trial of China to actually peg more and more gold to the yuan and use this as a, let's say, a de facto base for commodity exchange. And they started with oil, with Saudi, and they've also started to create some nodes, vault nodes, in which there would be convertibility of gold to yuan. And most famously, since a few years now, the Shanghai Stock Exchange and the Futures Exchange have actually been opening vaults for the first time to foreigners to actually allow that convertibility. Wouldn't that be a window for
but
China
that's
to
not
actually have still control of the yuan, but still be able to convert it to gold?
Absolutely.
Yes, 100%.
Absolutely.
That's why
The
they're doing it.
It is my opinion that at some point, one of the sort of signposts on the road to a more official form of gold remonetization will be that the global oil trade is going to shift into a largely gold-denominated oil trade. Because then, of course, you're trading in the world's largest tradable commodity, but doing so in an underlying money which cannot be arbitrarily devalued, manipulated, defaulted on, or anything else. That creates a neutral playing field for the global oil trade. And that, to me, again, is an expression of this Nash monetary equilibrium.
But
They will still allow countries to trade with one another as these disruptive imbalances are wound down and
Yeah.
sorted out.
What you're saying is China has defected from the system already.
beginning to.
And
They're
so
beginning to.
as they do that, the incentive for
agree.
every remaining player is to do the same, except for obviously the current hegemon.
Is it, you disagree?
This structure you described, which is, I'm not going to deny it's happening. It is happening. But I think, again, it's the causation and the rationale for why it's happening, which is being misunderstood. The reason this is happening is because the commodity producers are not comfortable holding unbacked yuan
No.
debt.
And dollars.
And
Yeah.
what
No,
else? Finish your
Yeah.
point, Izzy. Finish your point,
No,
Izzy.
absolutely not.
Why do you think OPEC
no.
changed the oil pricing
can you
convention in the
possibly- no, how can you
1970s?
Let's first hear,
possibly have
let's
that?
first
I'll tell
hear
you why.
Izzy to finish her
Because-
point.
Okay, so the reason the Gulf states are looking to China is because China is the biggest marginal buyer. The U.S. is no longer a net importer of oil; it is a net exporter for the most part. So the cushy days of the Middle East, petrodollar, high life are gone because they're not getting that inflow of dollars, right? So they have to look for other markets. China is the obvious market to service, but there is a reluctance to service it because the track record of China in the capital markets is way worse than
That's
the
what
US.
moves to gold.
Okay, that's one at a time, please. One at a time, please.
Right there.
But my point is that it's on the people asking for these gold-backed settlement yuan instruments are the oil producers who are not comfortable selling or holding yuan that is unbacked. Because they know that this is not a sign of strength of the Chinese economy.
I agree.
Well, let me ask you a question that follows exactly on this. When an oil producer sells oil to China and China essentially pays for it in gold because the producer doesn't want yuan. Are we all together so far? This is the idea?
Yes. Yeah.
Okay.
Although I think the acceptability of yuan to the producer.
So when the oil producer receives this gold, what do they do with it?
It's on their balance sheet.
Do they hold the gold?
If they're a net exporter, they can hold the gold indefinitely.
No. I know that they can.
If they choose to
I know that
import,
they can.
They can use that accumulated gold to pay for incremental imports.
So
why wouldn't they? Why wouldn't they hold the gold if gold is the currency of transaction globally?
They're not gold brokers. They're not gold investors.
Gold is
they are
just money.
corporations.
That's the same thing as
Hold on, guys. Hold on.
Hear out Brent here.
I understand that this could happen. We
No, we're
all
just responding to your
agree this
point.
could.
We're responding to your point.
Let's
Guys.
finish it first with Brent.
Can I ask my question?
Yes.
Do you expect them in the real world that we're living in today for Exxon or Aramco to sell oil to China, have China pay for it in gold, and they put it on their balance sheet and hold it in a vault in China? Do you think they will do that?
We will get to that point, yes.
In how many years?
Well, it's difficult to time it, but that's
Okay.
No. Fair enough.
No, but
we can talk about the things that determine.
hold on.
Like we can talk about the things that drive currencies between here and then, because there are different flows at work. But we're talking about a secular discussion of reserve currency shifts. Okay, like
right.
This is
But
not
here's
connected to
the
market
point I
trading.
want to make. Here's the point that I'm trying to get to. The oil guys probably understand this better than most, and I would argue you two understand it even better than the oil guys do. So my question is, how much oil or how much gold do each of you have stored in China?
What you're saying is, okay, we can't go to a new monetary order because it doesn't exist.
No, you can do it right now today. You can store gold in China today. Do either of you do it? Because you guys understand the importance of it. I'm sure you own gold in Switzerland. Yes. I'm sure you own gold in Switzerland or Singapore or wherever it is.
Yes.
Why have you not chosen to store it in Hong Kong or China?
There's specific geopolitical risks to somebody that lives
also exists
literally in the Western
that also exists
empire.
for the Western oil companies.
No, it's completely different because you have basically a Western bloc and an Eastern bloc, and as usual, a non-aligned bloc of suppliers in the middle, and they get to choose where they go. But people that live in the Western bloc that are subject to basically, the U.S. old order and the military protection that provides and all of the other features of our system, no, you don't actually want to store your money in China because one of the things the U.S. government will do when cornered is suspend your access to that money.
But so will China. Okay, so let me ask another follow-on question.
Because it won't face a currency rise.
If we just said for China to deal with the 70 trillion of internal corporate debt,
no, we
the
disagree
yuan,
with you on that point. We don't agree that causes a currency problem. Because they'll simply sell their dollars to support their currency and to generate
and
reliquify
the system.
That's the benefit of being a socialist.
Okay, so to be clear, because they owe it to themselves, you guys don't think that China has a yuan problem? You don't think they will have to devalue in order to fill the hole?
I think China has a fiat problem, but it's smaller fiat problem than the net deficit the deficit countries have, in my opinion.
Right, and currencies are just a zero-sum price, right? So it's a relative size that we're comparing here. And when your problem is internal,
it has zero growth at the moment. It has no investable.
No one's arguing that.
No, it is. It's a very important
point. It's in a debt crisis.
It's an important part.
So how is it going to get out of its debt crisis?
It's going to sell U.S. assets, bring the proceeds back,
if it sells its dollar assets, it is.
And when they do that, what does Scott Bessent do in return?
And also, it's frozen out of
what does Scott Bessent do when they do that?
Because
when
nobody wants to hold
one at a time, please.
What does Scott Bessent do in return?
Okay, firstly, countries' access to their own dollar funds has never, the only time that was ever impeded, and this is part of the problem with the U.S. reserve currency status, was in 2022-23 when they actually just seized and canceled all of the assets that Russia had accumulated that were claims on the U.S. So you think you're going to be a hegemonic standard that everybody's just going to follow, and you go and you seize the assets? Let me finish, please. Of your biggest creditor, of one of your biggest creditors, you just cancel their assets. So you're basically saying
you're telling me they're going to sell them all, so they're no longer the creditor.
That was the starting gun. Okay, like there's for anybody operating under this system, you cannot have your national wealth in the hands of a system that can expropriate it at a pen stroke.
Exactly.
You simply can't.
So then why would you store your gold in China?
Okay, so Izzy, you want
Because they could expropriate it. No, I'm talking about the Western
it's
oil
very-
companies.
Let me
Oil
I
companies.
have a simple answer to that.
Yeah.
If I'm an oil company and I want to do business with China, and China says, look, you do understand, if you're going to sell your oil to us, we're going to pay you in gold, but the gold will remain in our custody. It's take it or leave it. Hobson's choice. The oil company can say, I'm not going to do that. And China will say, okay, we'll find someone else who will.
That same thing exists with the United States, and you guys.
It does. I totally agree. But China's the net exporter. The U.S. is not. And China's the big net importer, however, of oil specifically, and the U.S. is not. So this is one area. This is one big crack that may become more evident as we start, to move towards a more official form of gold remonetization.
Let me ask you guys this, just because we are where we are in the world, politically, geopolitically, if China were to say, we are selling all our treasuries because we don't trust you, we no longer believe you're a good partner, and we think the dollar is going to lose value, and you may confiscate our assets, so they sell them all. Let's say the U.S. says, fine. The Treasury...
I doubt that would happen.
No, the Treasury or the Fed says, we buy them in 10 seconds, and the market doesn't care. And then we go forward 6 months, and now Iran, or whoever it is, Russia, starts sending oil into China. And copper on the boats from Chile goes to China. Do you think the United States, as the global hegemon, is going to sit by and let that happen?
No.
No.
Okay. So when
It's
that
gonna be
happens,
gunboat
so
diplomacy.
when it happens, what happens to the relative price of the yuan versus the dollar?
The problem is this.
No.
Let me answer your question.
Let me answer this
because
question, and then we'll move on.
No. Let me answer your question, which I'm going to. Okay, I'm doing that. I'm in the process of answering your question. The scenario the sequence of steps you just laid out to get to this hypothetical is not possible, because what you just said is that China will sell all their treasuries and the Fed will print roughly $2 trillion and give them to them.
No, it's only $700 billion at this point.
No, there's a bunch in Belgium, and they have some agencies. So let's say they get rid of all of that, right? And the Fed's just like, here's $2 trillion, and there's an immediate $2 trillion transaction in the currency market, and the yuan skyrockets. Okay, that is a situation where the dollar just automatically tanks very quickly. The Fed can't print dollars and give them in exchange to a foreign creditor who's going to convert them.
No, the Fed will just buy them from China.
Right, but with printed money, like whether it's indirect or direct, that money leaves the currency. There's a massive transaction of dollar selling and yuan buying by the people, i.e. China, who is doing that sale. So you can't actually get to your scenario without a dollar
appreciation of the
collapse.
yuan due to the export model of China and its capacity to continue funding its domestic liabilities?
Well, that's a good point, because the yuan just dropped below 7 recently, right? And it was...
it was a big...
But there's a reason the yuan's dropping below 7.
Exactly.
And it's not a positive one.
No.
It's because they have depressionary level deflation in China.
Right.
95%
and the currency's rallying.
And what happens
because of massive deflation.
What
because of all the debt.
And
how do you deal with the debt deflation?
You sell your dollar
You devalue
assets.
the currency.
Yeah, I agree. You sell your dollar assets.
Yeah, and you also
and you
devalue
buy your currency.
Yeah.
No.
But I believe that if China does try a massive sale of dollar assets to compensate for what may be an imploding domestic debt bubble, because of this geopolitical rivalry, the U.S. may just say, nope, sorry, we're not going to honor that. You're stuck with them.
Yeah.
Too bad.
Right.
We don't like you anymore. So, good luck to you.
That could easily happen.
And then, of course, gold is going to be remonetized immediately the world over. That's the end of the fiat system. All fiat
and they
currencies go
effectively
down.
already did that, right?
Well,
with the Russian central bank.
Well, but Russia prepared for that years in advance.
Yes.
And they executed
But they
that.
sent that message that they were willing to do
Russia
that.
has sent an example around the world that with reliance on non-U.S. trading partners and a willingness to actually use gold as a means of exchange for other real assets, you can build a moat around your country and you can continue to grow your economy
And have sovereignty.
and have sovereignty.
Hey,
There is
That's
maybe, in addition to Russia, maybe one other country in the world that can do that.
I agree there aren't many.
Can you name more than one?
But I would argue that many countries are watching this and they see, wow, this is where it's going. We need to start preparing for that sort of world.
So do you think, sorry, to add to this, because there was discussions about that have been a bit, let's say, slowed down or not followed up upon about the pegging of, let's say, gold and a basket of BRICS currencies. There has been also like more and more countries around the world, maybe small countries, not big countries, but important countries that also put interest and also joined this BRICS Plus alliance. Do you think that this is then maybe like a joining forces and trying to find a settlement of,
I think
gold-based
that's
trade?
possible. It would be much more difficult for China to try to move away from the dollar and remonetize gold alone than to do so in concert with the BRICS. China trades considerably more with the BRICS than it does with the United States. And the BRICS trade more with one another net than they do with the United States. If they move together as a bloc to reduce use of the dollar and remonetize gold instead, that would be far less disruptive for them. Sadly, it would still be very disruptive for the United States, which would no longer be able to finance its deficit as easily and at low interest rates as it does today. But it would be an easier transition for the BRICS. Still very disruptive, no free lunch. There are huge imbalances in the world today everywhere. But if push came to shove, that's one way in which this could happen. And I do write about that in my book, by the way. I mean, that is a scenario I go through.
I would say that if we were at a place in the economic cycle or the fourth turning cycle, that we weren't at the fourth turning part of it, and everybody was not kind of at the end of their rope in debt terms, and as a result, we could have another economic cycle, such as we had over the last 20 or 30 years, then I would agree that the scenario you guys paint is more likely. But because every country is kind of at the end of their rope from a debt perspective, that we are now at a geopolitical and historical perspective that will not allow for the scenario that you guys lay out to play. I'm not saying it can't happen, but it's because we are in where we are in the historical cycle.
Why?
So it
Why
leads
do they
to war.
stop?
So there has to be a war. Is that the alternative?
Why do they stop?
There will
each
be
other
one.
otherwise?
There doesn't have to be one, but there will be one.
Yeah.
No, I'm talking about the world as it is, not as I want it.
That's also very classic. Like that's the classic.
No, I agree.
I agree.
And this is the point that I've tried to make. Like, the point I'm making is not anti-gold. The point I'm making, you could argue, is extremely bullish gold.
I understand.
Extremely bullish
War is
gold.
pro-gold. I agree.
Right?
Where we disagree is just on the fiat, on what happens with relative fiats. But I think we all agree that this is unsustainable.
We may not even disagree, but we're saying it from a different perspective. And this is the point that I've always tried to make: is the dollar going down, that entrenches the dollar in the world. That doesn't de-dollarize the world. That is a way that new dollar credit has been extended to provide the liquidity, which in the short term makes the dollar fall. But as you move forward in time and that credit that has been extended now starts to come due, the dollar rises back again. So we could go to a world in which you guys are discussing, but I think the path to that sees the dollar go higher.
I completely agree with you. I completely agree with you, but I think we just had that period.
But you have a supply
That's where we differ.
But you have a supply curve and a demand curve. If the supply of dollars goes up because the dollar's going down because the supply of dollars is going up, that's one thing. What if the demand function for dollars fundamentally shifts away from the dollar because everyone prefers to hold gold balances instead? That exogenous shift in the demand function for gold makes the dollar go down at a constant supply of dollars.
Going down versus gold.
That's very much so.
But versus other currencies?
Oh, they all go down together because
hold on.
Because that blows up the whole system.
But
they all go down together.
That's a bank run on the system.
Do they go down? Do they go down more or less than the dollar in the scenario you just painted?
You know what? At that point, as you say, a war could break out. Everyone flees into gold. At that point, everyone flees into gold. They all go down. Whether one goes down by 98% and one 99%, you know what? I'm not terribly concerned about that. Gold goes to the moon, and that's why we're ultimately going to see outright gold remonetization, because that will be the only thing left on the balance sheet that is not defaulting.
You do know that you're describing the milkshake. I just want you to acknowledge that.
But with gold at the center,
not the dollar. Not the dollar.
The golden milkshake.
No. This is the fundamental misunderstanding of the milkshake. The gold has always been the winner in the milkshake. Always. Go back to the first time I talked about it and listen to everyone.
Agreed.
Right.
The point was, though, the transition for gold going higher and becoming the new money sees the dollar go higher versus foreign currency.
I just think we just
now,
had that.
if you think that we are going to have a war in order to come to this new system and the dollar is going to fall versus foreign currencies, I'm just going to disagree with you 100%.
And I'm just going to say that all bets are off when World War III breaks out.
Point,
gold goes to the moon, and that's the only thing I will...
But hold on.
Let's stipulate that point. No. Let me respond to that. Let's stipulate that point. Gold goes up. Everything else is absolutely annihilated in any meaningful sense, right? But in the meantime, I think the point is that in that kind of a scenario, which is almost always the fourth turning, imperial switch scenario, it's always chaotic. It always requires hitting a hard wall. Now, the argument is maybe we could try to engineer something strategically that's less painful. But in that hard wall scenario, the pain is so great. Either inflationary debt collapse, income compression, also, social unrest, political strife, all sorts of tail risks emerge, which is why usually there's a war to pacify and distract. But, and also just rivalries between these competing powers. But that always happens. And what will happen to currencies at that point will not be a function of the balance sheets or the transactions of global trade or foreign claims. It'll be a function of what policymakers say and do and impose, like capital controls. And at that point, the incentive is to flee before they do anything.
Absolutely.
That's the problem with that.
And that's the nonlinearity, where everything spirals out of control.
So, let me just express to you why this is starting to frustrate me. Because I love talking to you guys about this stuff. But I've already acknowledged gold could go to $50,000 in this scenario. Can we now talk about something other than gold?
I thought this was about gold.
No, literally.
I thought this was about gold.
No, but Brent, I wasn't talking about gold. I was talking about dollar versus euro, dollar versus yen. I'm not talking about gold. I stipulated that at the start of my point. I think the reason this frustrates you is because you refuse to acknowledge that people are net dollar asset holders.
No.
They're not net dollar debtors anymore.
Okay.
They can sell those assets.
For the sake of the argument, I will give that to you for now. Now, we agree that gold's going to go to $850,000 an ounce and that the world is net positive dollars. Can we talk about relative level of fiat just for a second, even though this overall
That's what I was
conversation is
talking
about gold?
I was just talking about that.
Okay, so so then
we can.
No.
I just did. You just don't like my answer.
No. I heard your answer and I've accepted that that's your opinion. I would like to hear from John. In the scenario that you painted, I am curious whether you believe the dollar would outperform other fiat.
Some other fiat would probably outperform.
Which one?
I think Japan and Switzerland hold up very, very well in this scenario. Japan can fund its retirement system for over a decade by gradually liquidating its holdings of treasuries. And so it can get through its demographic time bomb. It can actually diffuse its demographic time bomb. Not 100%, but it has a lot of flexibility in that regard with its massive net foreign credit position. So Japan's got a lot of flexibility. Obviously, Switzerland has a lot of financial flexibility because of its massive net foreign credit position relative to GDP. So you do have a few countries that have tremendous flexibility. However, as you always are keen to point out, the moment war breaks out, you know what? If you're holding fiat, you have no flexibility. All that's going to matter is how much gold you have. And if it's a worse scenario, you go straight to gold. I don't care what fiat burns first in that scenario.
I would also add China to that. I think China as a net creditor, particularly because it's its own. I totally, Izzy, I totally get your point on silver, and China basically has a lot of the refining capacity of a lot of minerals and real assets, whereas the source supply is coming from parts of the Western world. But this is also why they've basically, they basically extended so much debt through the Belt and Road Initiative across Africa to secure these resources. My point is just that China actually now is partnered with Russia and other folks at the fringe, is a pretty cohesive unit financially. The issue it just has is that, then the world will have this issue, is that all of the refining supply for raw materials, all the manufacturing capacity. It's all in this block, in the Eastern Bloc, and all of the demand is in the Western
I would like to
bloc.
focus the question a bit more here on also like the pricing of gold. We've seen there's a big divide between. I'm sure if Izzy, your point was to this, but otherwise I would like to maybe move on to another point. What did you want to say? Very quickly.
I just wanted to say that if we all agree that all these surpluses are bad and have been like responsible for the hollowing out of industrial, manufacturing might in the West, then surely if these countries unwind these surpluses because of the dynamics you're talking about, that will inevitably create demand that allows America and the West to reconstitute a lot of that manufacturing strength.
I agree with that.
through
I
competition.
absolutely agree with that.
So-
Excellent point.
Yeah.
Okay, great. On this
Thank you.
agreement, perfect. Everyone agrees. That is wonderful, a miracle. That's suspicious. So one thing I was also like that I think barely mentioned is the pricing of gold, right? We've seen historically COMEX and London being kind of the source of this pricing, more and more moving east. There's periodically higher premiums in Shanghai. There's a physical demand in east, but still the financial plumbing being heavily still in the west. How does that transform kind of the question that we had then on physical versus paper, where paper would be, let's say, still the West dominant way of, let's say, lubricating that mechanism of pricing gold, whereas the East is just going full-fledged on physical only, and kind of scavenging if it's just not gold, but also silver and all kinds of other commodities.
Can I ask a question? When you say going full physical, what does that mean?
Physical being like the purchase of physical actual
As in direct?
delivery, direct, yes.
Yeah.
Right.
And you're just comparing the COMEX market, which it has the option to cash settle built
Yeah.
into the contract.
But which mostly doesn't,
versus-
right?
It mostly does.
So there's been a
yeah.
net flow of physical gold from west to east for many, many years. Right? This has been going on an awfully long time. But of course, the West has a very large gold derivatives market, whereas the East doesn't really have a large gold derivatives market. What I think is interesting here is, of course, gold derivatives and silver derivatives require counterparties of some kind. Physical gold does not. And if you require counterparties, then you need a legal framework that is accepted on both sides in the event one of those counterparties is not able to fulfill their obligations. When trust and confidence break down in the markets, and there's even a lack of trust and confidence in the legal regime and the jurisdiction itself, perhaps because World War III has broken out, physical gold is all that matters, or silver is all that matters.
With a caveat.
And I think one reason why there's such a preference for actual physical in the East is because the East simply does not trust Western institutions anymore.
Yeah.
And if the West tries to keep the game going in gold and silver by innovating around the margins with new exotic derivatives that somehow have some yield on gold or silver in exchange for supposedly an acceptable risk, I don't think that game is going to be played in the East. I don't think they will go down that road.
defeats the whole purpose.
I
of
would
gold.
argue that the reason that the East has an affinity for real gold and silver is time and time again their own currencies have been devalued against them.
That's part of it. Yeah, I would agree.
I struggle to find more than a cursory amount of citizens in China waking up every morning and say Jay Powell's lost his mind. But my Yuan doesn't buy me. But
Well, if you read the China Morning Post, articles like that appear with some
They're
regularity.
very aware.
And,
They're,
and,
the
and
Chinese,
if you
I can
believe
say,
the articles on the headlines
I can
of
say
the
from
South
personal
China Post
experience.
in the same way that
it might
do
be
the New York Times.
propaganda, but they
Of
appear
course it's all-
regularly.
I can just tell you
all
from personal
propaganda.
experience, having interacted with these policymakers, that they're well aware of historical cycles. They are well aware.
God.
The Chinese, more than anybody else, studies what happened to Japan. How did the Soviet Union break down? What happened to us in the various dynasties, 2,000 years ago? They've learned through a long, continued existence and, embodied knowledge of how these cycles work, not to print, not to fiscally stimulate. You see Xi saying, look,
China
no
printed more money
welfare.
than the United States did.
Look, yes, and Xi is now saying, "Look, we're gonna not do that, right?" Like he's
No, but they've done it.
No.
They've done it. In the last 25 years, China has printed more money than the United
But
States.
maybe they're
This is
calling time.
because they're
Maybe they're calling
no,
time.
but this is
Time.
they're
Actually,
exactly
to
no.
the
It is
opposite.
now
One at a time, otherwise it's
please just let me finish this point. Okay. They are calling time on the whole system. They've been doing that because they've been a willing party to the U.S. dollar fiat system. That's why they've printed. In exchange, the U.S. has printed. Everybody's borrowed. Okay, the imbalances are everywhere. The misallocations are everywhere. China's opting out of this system. They would have done way more printing last year to deal with this property collapse if they weren't focused on the currency. That's what they're focused on, strategic dominance of the currency as a transaction unit. And a savings vehicle, ultimately.
They're stuck between
but they
a
don't
rock
need
and a
that
hard
initially.
place.
I agree with that.
Because
They
they
are.
can't.
Yeah, they are.
Let's hear Lizzie out.
Yeah, so the way I see it is that they're stuck between a rock and a hard place. If they allow the currency to appreciate too much, they lose their export advantage. If they allow, if they print the money they need to print to effectively stave off a massive deflationary crisis, they're forced into liberalization in a way that is incredibly. I think it potentially limits the control of the CCP, and they would have to then allow for the sort of welfare economy that just does not exist in China. That would make it uncompetitive also on an export basis.
Wait,
So-
why do they have to do a welfare economy?
Because they have no welfare economy at the
Why do
moment.
they need one? They don't believe in it.
Well,
But
because
if their currency gets devalued by 80%, they're going to have to.
Which is how-
and
like you.
also
in
without
your opinion.
Right.
because,
like, that doesn't
because
mean
if
they
you
have
have
to
a debt
print and-
deflation, how else are you going to support how are you going to stop people going hungry? You're
The
going
free
to have
market
to.
just clears if you
I
let
don't think it would.
China
just
has an
clears.
institution called the family and the extended family.
Yeah, but they have no savings. They have no capacity to save because every single time they try to save, she kills one of the bubbles. So they can't. Historically, something is changing now. I don't disagree. I think they're slowly shifting towards liberalization. They've been forced into a corner where they have to. However, traditionally, every time a Chinese family wants to put their savings into something solid and secure, something happens. Whether it's shadow banking, that gets constrained. Crypto, out of here. Obviously, capital controls, very difficult to get exposure to the dollar. Real estate, well, we know what's happening with
Well, maybe
real
that
estate.
helps to
The
explain why they're
equity
buying gold.
market, look at the Chinese equity market. It has literally
It does.
flatlined.
It totally explains why they're buying gold.
Yes,
Their currency is
yes.
going to go to shit.
They're all going to.
But the point is, they're left with no other option
Yeah.
to put their money. Where
Exactly.
else are they going to put their money?
In gold.
Exactly.
And
In gold.
if you every other
We agree. I think we're on the same page there.
other savings option has no yield to it, right? How can you and you're facing a demographic crisis on top of that, where most people have one child.
Yeah, the demographics are awful.
They have okay. So I think their plan is we can shift into robotics. We can somehow we can move up the value chain. We don't have to depend on cheap labor anymore. But at that point, you're liberalizing the system. You have to, because with the concentration of technology, AI, robotics, how else are you going to distribute the wealth locally and ensure people literally don't starve? And if you do that, you're finally, I think, competing with the West at an equilibrium, at a fair, competitive sort of level, where you don't have that sort of continued price manipulation to give you an advantage on the export.
I'm going to recenter the conversation here, less on China, focus purely on China, even though I think we covered a lot of that.
Sorry.
We did kind of focus on China.
And I think it was like a China gold thing. But I really want to bring it back now to the pricing mechanism, because I think we haven't answered this properly.
Can I say on the pricing and on the physical point in China?
Yes, please.
My understanding, and I could be wrong, is that people in China, there's such demand to basically hedge against Yuan risk that they can't even afford a gold coin. They're buying gold beads. So this is why you've seen this push.
Got to start somewhere.
Yes, but on a relative price level, this is not indicative of a rich society that's going to outcompete America
if that
anytime
gold bead
soon.
is revalued to $20,000 an ounce, they'll become wealthier.
gonna be good for that guy.
In purchasing power terms.
But the other thing is, though, you're approaching this from kind of a Western mindset. And I think you underestimate the hardiness of emerging market populations who have never had the ability to rely on a welfare state and somehow are used to and conditioned to the volatility they endure. And they do that by not having a lot of debt. That's the main thing they do.
Yeah. So now I want to kind of refocus this, and I want to ask you, if London remains the primary OTC physical clearing hub, and that the COMEX dominates liquidity through futures, then what is the thing that the East needs to, let's say, get to price its then East side?
Open markets.
When it comes to gold specifically?
Yeah.
Yeah, okay.
Yeah, liquidity.
Yeah, you have to remove capital controls and you have to have open markets. And
one thing that I think would
I
help
don't think they want to do it.
They don't.
China in this regard, you have to build trust and confidence in custody of the underlying metal. China might do a deal with a country that's perceived as a relatively neutral, independent power that's willing to serve as the custodian for the gold in lieu of it being mainland China. Maybe there's some sort of deal that could be done with Hong Kong or Singapore.
Well, they're already doing that.
Well, but you can see why. That would be a halfway house.
Sense.
Be a bit of a
Right.
halfway house. Say, okay, we understand, as you were saying, Brent, we understand Exxon or whoever, or Chevron or whoever it is. We expect you to pay gold the gold market's going to have to shift over to oil now. But we understand that you don't want it to be mainland. Okay, we've made an arrangement with Singapore or maybe in future the Philippines, or who knows what it is.
It's their own offshore. Asia has done this many, many times where they want to open up, but they don't want to give up complete economic control. And how do you thread that needle? And they do it by creating free trade zones, little areas like Shenzhen that have basically a self-contained financial system and settlement payments and a different set of legal structures and so on. And now they're adding to those free trade zones offshore financial zones, which sort of function in the same way as what you're saying with Hong Kong. Hong Kong was obviously the best example.
It used to be.
Yeah,
now it's questionable.
On the currency level, I had an interview with Louis-Vincent Gave, who was floating the idea of the Hong Kong dollar being kind of like a proxy for the yuan to be able to actually achieve this kind of...
They might repeg that to gold. That could be a way to thread the needle a little bit. I don't think they need to do that, though, but there's a lot of liquidity in Hong Kong that could be immediately converted.
So I want to finish on the tokenization of gold and to see how actually that would be a path forward. It's something that's been obviously kind of talked about and also explored from the BRICS focused point of view as well. How realistic do you think that this could actually work? And also, Lizzie, you've made a lot of work, I think, in stablecoins, especially recently, and you're also going to publish, I think, soon. I'm not sure how much you can share about this. In a report that people in the gold industry know about. How would you say that this system could actually work on a tokenized gold basis?
So, I mean, it's been a fascinating year for tokenized stablecoin gold because one of the biggest players, Tether, has not only, been pushing its core product, but it's also been buying gold on its own balance sheet with the proceeds it has made from issuing dollar stablecoins. So it's this interesting hybrid of a gold. I mean, when you look at, if you trust their attestations, it's this interesting hybrid of a financial institution going to a gold equity-based reserve system, which also happens to have its own dollar rail system, which can't be manipulated in the way that the old Eurodollar system could be, where banks were effectively, it was very hard to police their capacity to. I mean, obviously, even Tether can't prove it's got the assets it says it does, and this is the fundamental ongoing problem wherever you go. I don't see blockchain or tokenization really solving that. That is, like we discussed the other day, it's fundamentally about the reputation of the company, and are you using good custodians? Are you able to kind of provide proof of reserve in a way that satisfies your market? Now, Tether has... What I find phenomenal about Tether is that despite all the sort of scandals and continuous rumourage about its lack of reserves, it seems to defy the odds. It grew despite all of that to this huge level, and people seem to trust it. And whether that can be true for a gold-backed system as well, I don't really see how the stablecoin innovation helps on the gold front, frankly. I don't see it as that different to GLD or before that to e-gold or any other mechanism. The real innovation is the tracking of the tokens themselves, but not the underlying assets, right? So you have to still trust the company. So, I mean, that's broadly what I think. I don't have a big
Why would they get audited? Why do you think, what's your thought?
on Tether?
Yeah, why not do an audit?
Well, because
solves that problem.
I think being in the gray zone is somewhat useful sometimes. And, they're based out of El Salvador, and they have certain advantages in being in this sort of ambiguity realm. Obviously, all the Genius Act issued stablecoins that are now firmly, like Tether has issued a USAT, I think they're calling it. That has to be fully audited and based on the Genius framework. But, I don't want to it's hard to answer this question without speculating wildly, but I think there's an advantage in terms of having a bit of wiggle room on what you can promise to redeem and what you don't promise to redeem.
And that's the essential point.
From a statecraft perspective.
Other factors equal, the fewer links there are in the custodial change, the greater the trust and confidence in that particular protocol for exchanging gold in a stablecoin format. And you mentioned GLD. One of the possible advantages of a stablecoin is it can be set up in a direct custody way, where there's direct ownership of that metal backing the stablecoin, whereas GLD is set up under banking and securities law. And within that banking and securities law, there are force majeure and other clauses that give GLD some flexibility within the regulatory structure to engage in derivative use for liquidity purposes, temporary liquidity purposes and whatnot. Stablecoins probably could not get sufficient trust and credibility if they operated in that way, saying, oh, by the way, if we get some liquidity issues, we're just going to use gold and silver derivatives instead. So it's a possible way in which stablecoins could distinguish themselves as a potentially superior form of nearly direct personal custody of gold and silver vis-a-vis the way GLD was set up.
But also, if the payment rails do switch, right, and this is obviously like an incremental thing, it's unlikely to be like a big one-off switch. It's like atrophying over time and porting it over time. If that happens, then GLD and gold-backed stablecoins would fundamentally offer different functionality. Like you can save and have exposure to gold, either the asset or obviously the price, through GLD or something like that, but you can't really transact with it. Whereas you could transact theoretically if the payment rails do go into blockchain.
Another potential advantage, absolutely.
Yeah.
Which is why
that's been the problem with
the
gold
real
historically.
proto, version of it is e-gold, I think. But I don't know, and I don't know. This is genuinely, I don't know whether, if you have that transaction functionality, does that allow for that direct link to the underlying assets? Does it not allow, more obscurity? Because if you've got a very liquid pool of tokens that are changing hands, how does the custody directly line up? It becomes a bearer instrument, which is, you would say, like some sort of encryption pairing would entitle you to this block of gold. That's how you see it.
Yes, indeed. And keep in mind that financial assets, for the vast bulk of the development of the modern financial world, were bearer assets.
It's like a tally stick type.
That wonderful thriller film Die Hard is based on trying to steal bearer bonds in the vault of the building. I mean, that used to be the way things were done. So this, in a way, is going back to the way things used to be. Again, bearer assets have advantages and disadvantages. They're subject to potential fraud. You have to do your due diligence. And to be fair, the only regulator for a bearer asset is caveat emptor.
That is something to think about. And I don't want this to come across as negative gold, because I'm a huge believer. But gold actually does have a counterparty, and the counterparty is whoever's storing it.
I do agree with that.
Right?
Yeah.
And that's why I think.
Oh, you can go with your own bunker.
Yeah. No, that's what I'm saying. You can self-custody, right? That has risks too.
It does.
Right?
Or your own counterparty risk.
Absolutely.
You might forget your lock.
You're absolutely right.
Yeah.
Yeah, there's no perfect solution to any
No,
of
there's
this.
not.
That's another thing. Like
Yeah.
we were saying, these like are hard, like these
could
are
have
like objectively
We could have a
good
treasure
outcomes.
map and bury the gold.
We live in an imperfect world. The
Yeah.
idea that there is a bulletproof solution to
Yeah.
any of this there simply
Yeah,
isn't.
we just should not have got here. That is like, but
We-
you
we
can't.
can
We
agree-
are
we
here.
can agree on
you
that.
know?
It's not a good place to start, right?
Yeah, right.
Indeed.
So don't you see, because Brent, you've also mentioned that you see stablecoins as a new Bretton Woods moment, right? But does then tokenized gold also fit into that equation?
Sure.
I think it fits in, but through this fact that the stablecoin, a lot of these stablecoin companies like Tether are indirectly reserving their own equity in gold.
Yeah, and the question is, why did they all of a sudden start buying so much gold so aggressively?
Well, I think there is a growing awareness that fiat has many problems, even at like the citizen level, right? I don't think that citizens in general understand monetary theory. They do understand that over time their fiat currency doesn't buy as much as it used to, and I think that what's happened since COVID has reinforced that to a greater degree. One of the things that we've talked about, I can't remember if we talked about it earlier in this discussion or if it was last night, is we were talking about, the to the extent that China or Russia or whoever is no longer buying as many treasuries as they used to, and so now that excess has to be sucked up by some other country. I think that excess gets sucked up via stablecoins, and I think gold continues to rise in importance as well. And I think that's how the dollar and gold end up, rising together versus all the other fiat.
Let me ask everyone a question, just quickly, very short question. If you had the choice as an investor, strategic, official, or just an ordinary household, to own a non-interest-bearing dollar-backed stablecoin or a non-interest-bearing gold-backed stablecoin, which would you prefer?
From an investment perspective or from an operational perspective?
Either or. You can break that up if you want.
If I'm just an investor looking to invest, it's clearly gold. If I'm running a business, it's clearly dollars.
Okay.
Yeah.
So why I'm interested in the equity layer is because, I don't know if you recall, after 2008, there was a great book that was written by Anat Admati called The Banker's New Clothes. And her basic argument was that banks should be more like, VCs and fund a lot more of their lending through equity rather than through debt. And if that was the case, the system would be much more resilient.
Right?
That's how it used to work. Yeah, it's how
now
limited liability.
Yeah.
So
to be done.
So when you look at how the analyst community sort of judges Tether and the credit ratings, and you see they're all they see it as very risky, and they're saying, even though it's one-to-one back, there's all this ambiguity about the nature of the reserves, etc. But what I think they fail to account for is that Tether is not, it's one of the stingiest companies in the world. It has a very small workforce, and almost all the proceeds it reinvests, right? So all the really risky stuff they're doing, and they are, I sat down with the CEO, and he was explaining, they have a sort of one-third of the proceeds go into gold, and what they see as hedging against debt, against the sort of debasement risk. Another third goes into super high tech investments where they're doing all these crypto loans, AI loans, and then there's another share where they're buying land and commodities and trying to kind of so they've got a really interesting sort of portfolio mentality in terms of how they're managing the equity, but indirectly they are turning themselves into what I would call an equity-based financial lender, which is exactly what Anat was saying we should end up with. The banks were never going to do that. The banks were never going to reinvent themselves that way because, A, they love the bundling of the payment flow with the credit function, right? They love that.
Yeah.
Having a license to print money
and an unlimited laptop.
Whereas in this way, Tether has indirectly allowed us or shown us a pathway to this unbundling of the two back into the old sort of the payment flow stays fully reserved, but we have this equity buffer, which is where we're going to do our high-risk lending, our credit lending, all the sort of other kind of macro-focused stuff.
The problem is they got to be good at that lending.
Yes, I agree. But the point is that equity then is indirectly backing the stablecoin element. So when S&P looks at the overall business, it should account for that equity, because that's at the end of the day, if there's a problem in the payment rail side,
but the problem is that if they make losses, which they will cyclically on the lending exposure, that will eat into the equity buffer.
Sorry, say that again.
So let's say they have the equity and it's backing the transactional function, and then they have even let's take Tether's ratios. Like I think they got about 15% in gold, right? So let's say that's their equity layer, and then they've got 6x leverage on that, which is pretty modest from a bank perspective. So if it runs like that, you're still going to have credit cycles, and you're still going to have losses. And so there has to be strict limits. It's accountable, but the problem is there's no, this is going back to Glass-Steagall, right? Like there's no dividing line between the liability you take on the credit book and the backing of your transaction functionality. Because what will happen if it's all one unit is that as these losses occur with the credit cycle, it will eat into the equity buffer.
So
I also have to caveat very.
And you go after
Yes,
the owner's assets.
that's the answer. You have to do it unlimited.
Concluding thoughts, ladies and gentlemen.
I must caveat this because they don't want to be seen as a lender. They are. They see themselves as an investment, vehicle.
Yeah.
Not a lender. Like
All right.
just for.
Medium of
conclude
exchange.
this conversation,
Yeah.
and I think this coming days will all about be following up on that and just taking those things apart, which is beautiful. I think this was also the aim of the session. Very shortly, though, I would like every one of you to maybe give your concluding thoughts on the future of gold.
Well, so I think we spent a lot of time talking about the secular picture. I think that I have kind of a different view about the recent gold rally in particular, which I think is important for the directional countervailing headwind against that secular picture. And that is just that, the U.S. economy has really been dying on the vine for several years now, but particularly the rate-sensitive economy. And then when the trade war happened last year, there was this huge rush of front-loading and consumers bringing forward big-ticket spending and companies and multinationals building supply chain buffers onshore, right? So all of that led to this enormous explosion in trade last year. And that money largely went everywhere, but to all the exporter nations, but a lot of it went to China, and China on the official side took the proceeds and put it in gold. And it's that transfer of dollar liquidity from onshore to offshore and recycling into gold instead of back into the U.S. system, which led to combination of dollar weakness versus other currencies, the gold surge, the silver surge, as well as the relative outperformance of global assets versus U.S. assets as the liquidity flows dictated which local currency securities did best, right? Both bonds and equities. So tactically speaking, our view is that we are in a recession right now, that we've just entered a recession, that we've pulled forward all of this demand. It's going to be very difficult to stimulate for a bunch of reasons we don't need to get into, and that's going to be a big headwind to trade demand. And so the main channel by which U.S. dollar liquidity gets moved abroad is actually the trade side. And that in a recession starts to fall and go down, which has the effect of kind of narrowing the base of the financial architecture. So that near term is bearish. A bearish force. It might not be how it nets out, but it's a bearish force for gold prices if we go into a, recessionary deleveraging, essentially. In the same way that liquidity contracting is bad for Bitcoin, right? Because these are the prices are functional to the supply of dollars moving out of the U.S. But if that happens, that's a very good opportunity to port. I mean, the U.S. reaction to this cycle will be important. But if they overreact and overprint, it's like a very clear time to buy that.
John.
Well, I'm very explicit on this point, and I have been for about 20 years now, that eventually gold is going to be properly remonetized. Exactly how long that takes, exactly how we get there, exactly how disruptive it's going to be, I don't know. But I believe history is clear on that point, and I believe game theory is clear on that point. And just one point I'd like to stress is that people push back on me and say, but nobody wants to lose the control of the printing press. But if you want to try to rebalance the system, as disruptive as that might be, and still trade with other countries, in theory, to the benefit of all, you've still got to have a means of exchange that everybody trusts as this is going through the readjustment process. Gold provides that game theoretical Nash equilibrium because nobody can devalue it, nobody can default on it, nobody can manipulate it to the same degree as they could their own national currency to their own national benefit at everyone else's expense. It is the true level playing field for international commerce, one that in theory the world was on for most of recorded economic history in some form. When you stray from that, bad things happen. That's happened again. And so I think to correct the imbalances and correct the system, that's where we're going. I strongly hope this is possible without World War III being part of the transition. But I admit the risks are high. Regardless, whether it's a World War III scenario or not, gold goes up because the demand function for gold will shift so fundamentally versus national fiat currencies that it'll be sort of a qualitative step function almost of order of magnitude for gold that will be high enough to devalue the imbalances, which are all fiat denominated. That, in my opinion, is how you rebalance the global economy and ultimately get on a path to sustainable growth again. But that's optimistic at this current point in time. But we'll get there someday.
So I just have to correct that. When I said Teva has a 3-pillar strategy, I misspoke, and I just want to emphasize that it's 1/3 sort of reinvestment in gold, land, sort of debasement hedging. The third strategy is reinvestment in their own business, their network, their rails, and then the other third is VC kind of style high tech. So just wanted to correct that. But in terms of the future of gold, I mean, I see gold being the primary vehicle for countries that don't want to use the dollar, basically. And I think they're going to be forced to do that because the era of these soft budget constraints, the era of using your own currency as like manipulation of your own currency or devaluation of your currency to gain an edge in the export markets, those days are coming to an end. And to be able to have access to capital markets, you need to show that people can trust you. And unfortunately, when you don't have, if you're not the global reserve currency, you're going to have to use something else. It's going to be gold-backed stablecoins, some sort of element that is that provides those countries with a hard currency mechanism. It could also be Bitcoin, but I don't know.
Yeah, I would just say that I've long felt that gold was very important. Perhaps the most important part of anybody's portfolio or any institution's portfolio. But I'm not somebody who thinks all your money should be in gold. I think it should have a healthy allocation, but I think you can have other things in there as well. And while I think gold will become even more important in the future, I don't expect it to be, that doesn't necessarily mean the price is going to double or triple in the next 6 months. Gold could rise in importance and go sideways or even down for the next 2 or 3 years, and it wouldn't change anything for me. So I don't really think about it on a price perspective. I think of it on an optionality perspective, and gold provides incredible optionality. And, the final thing, and I've said this last night, I'll say it again, is I think the last thing that a country wants is a gold standard. Doesn't mean they won't end up there. Maybe their hand will be forced. And that's one of the reasons why gold gives great optionality. But I also still remain of the opinion that fiat currencies are important, and the relative levels of fiat currency are extremely important. And it's important to understand why that is. And so, having discussions like this is a good way to kind of it's a good way to we're never all going to agree on this stuff, right? We're just not, because we have
but these are the issues.
Right, but these are the important issues. And so this is my way of saying thank you to you for hosting something like this, so the people who aren't as versed in it as maybe we are can start developing their own ideas about it. Because one of the things John and I were talking about at dinner last night is our kids, and we have instilled in our kids, we've never told them what to do per se, and we've never told them what they had to think per se, but we like them to be able to think and make up their own minds.
Yeah.
So I think
Can you send them this video?
This is a good effort in that.
Yeah, perfect.
Critical thinking is the new gold.
There you go. There you go. There you go.
All right. On this note, thanks to this amazing panel for all the ideas, this intellectual arena that is in the best of settings, I would say.
Yeah.
To the viewers and the listeners, thanks for still holding on to this heated conversation. And don't forget, you have a discount code session2. You will see all the details about this in a link in the description. Please like this video, subscribe, and I'll see you in other sessions of the Future of Gold.